It is July the 2nd, 2009. Here's Brian Acker for his regular report. And boy, the quarter we've just had has been terrific.
There's only a handful of times where you get, in the last 80 years, where you could get this sort of rate of return. So we're happy to say we did catch it. And
you didn't call it, but you caught it.
We caught it. And timing doesn't work. We keep on saying that, but no one would have guessed we'd be up certainly this much, certainly this early. So year to date, Canada we're up 23%, U.S. we're up 11%. We're not only in the top quartile, but also the top decile of performers. Value has come back.
Well, when you stick to a strategy, I mean, we've been long only value. The time had to come back to us.
Value is so cheap and still so cheap relative to where it is, and over long periods of time, value wins over growth, over momentum, you name the strategy, but value wins at the end of the day, and we just saw a hint of it probably in the second quarter of this year.
Unless you believe there's a 20-year cyclical recession upon us, unless you believe the Bank of England's about to collapse. I mean, these are stories we hear every day.
You know, this is going to be a hard slugging process where we have to get through this. And I guess, you know, I get disappointed as well. I wake up at 2 o'clock in the morning. The U.S. and the Bank of England, as you say, are going to have debt to GDP probably in the 100%, over 100%. They're going to have to spend massively to get out. I mean,
and run the printing presses, which means inflation.
Totally. And but what is the? Unfortunately, if they stop, we have major deflation. So they can't stop.
Yep.
But you know, you have those 2 o'clock in the morning thoughts of going, geez, if they get this wrong, you know, we really got a lot slogging to get through. But this is a process, and the wonderful thing about our system is it is transparent to certainly our unit holders, anyone who's interested. You can go on our website. We have our top 10. You can see what's mispriced.
Yep.
And that's all mathematical. There's no opinion on that. So again, we accumulate that information, that data, show you in a very simplistic picture what the company's trading for, what the company's worth, and certainly you would have that in your portfolio.
But it is amazing that you outperform in a rising market, and we've seen underperform in a falling market.
We've seen underperformance only to the extent of, let's say, in 2008 when nothing was working, when systemic risk is working. But the reason why we're beating the index is, yes, we're actually outperforming in a down market. And the down days, you're actually seeing we're outperforming. So if the system is working, you know, and again, if the banking system is working, et cetera, and the market is functioning, if you allow it to function, then money finds cheapness, money finds value. And what we saw basically in the second quarter is we're getting back to that particular market. So if over the next 5 years, certainly we have this sort of market where nothing seems to happen on a day-to-day basis, but you're catching these moves, a la Microsoft. So let me give you an example. Microsoft went from 15 to 23, 24. Did you see that on the front page of the business press?
I did not.
Of course not. So we're catching these moves as we did up until July of 2007. The market is now working again. So if the market does this from now to for the next 5 years, we're ecstatically happy because the winners don't really show up on the front page of certainly the Wall Street Journal, and we just keep on with the machine, if you will. Buying cheap stocks.
Well, you're buying pharma. I see the portfolio. The U.S. portfolio has lots of pharma in it.
Everyone's worried about Obama, and certainly when you look at the Pfizers, you look at the Lillys, you look at the Bristol Myers. That's what we have certainly in our top 10. So that's the emphasis of the U.S. portfolio. And again, you know, people are getting older, but people are so paranoid about what Obama's going to do in the healthcare area.
The values have been beat down, so time to buy them.
I mean, I look at what Obama has to do and the issues that have to deal with, and there's only so much time, and whether he actually even gets to health care is, I think, a an open question. So
I hear you.
And again, we saw this with Bill Clinton. He was going to do something, and at the end, nothing was done.
All right, the Canadian portfolio, because we're moving along here. You're nibbling on the financials.
No, 2 months ago we were 45% financials. We caught the rally, and keep in mind, let's even go back further. We caught RIM. Okay.
Yeah.
If you didn't have RIM, certainly in your portfolio, certainly in that first and second quarter, you're nowhere in Canada. So again, when you look at 23% gains, a lot of that was because we caught RIM. We caught RIM on a very, very cheap basis. Actually, we caught RIM the last 3 times, kind of in the high 40s, so that's fine. Then we've shifted into the banks. Most of the banks are up 100%.
Yeah.
So we caught the tail end of that. We've always had financials, but we've been reducing financials for the last, certainly last month and this month, as they certainly have risen above their model prices.
All right, very quickly. Now, on my fixed income side, can I still look forward to that big 1%? Have you changed your views?
What will happen over the next 5 years is debt for equity swaps. So all that debt out there that ever
that's right, whether you want it or not.
Exactly. It's gonna all that's got to be converted to equity.
General Motors.
Okay. And what's complicating in there is this thing called credit default swaps. This film is far too short for me to get into that.
Insurance.
But I can assure all of our clients that if we have an opportunity of certainly getting higher interest rates with assurances that we're going to get our capital back.
I would like that.
You know, everyone's wants yield, but they're willing to kiss their capital away, their principal away.
I am not.
To get that yield.
I am not.
It boggles my mind, but I see it every day. And you see new products generated for that particular genre. But we're not there. But certainly we're out there, we're scouring the framework, and if we have any sort of great investment out there, as I have previously. But again, our primary concern is getting our money back, and that's where you're getting your 1%.
A positive and fascinating report. Thanks for your time, Brian. I'll be in to see you in a few weeks.
Great to be here, Michael. Great to see you again.